Seattle, Washington is one of the most expensive housing markets in the entire country. At the same time, it is also experiencing one of the biggest price corrections in terms of housing prices in the country as well, and prices are currently much lower than they have been in the past. This begs the question, is now a good time to jump into the, yes, high-priced, but historically very high-growth housing market in Seattle? Today, we're going to do a deep dive into the Seattle housing market to help you decide if it's a good market for you to invest in, and if so, how you should go about doing that. For this deep dive into the Seattle market, I want to give a big shout out to our friends over at Belong. They have provided all of the data that we're going to be looking at today. If you're not familiar with Belong, they bring end-to-end home management services to your fingertips. With them, you can enjoy guaranteed rental payments, vetted residents who love your home the way you do. You get 24/7 support for you and your residents. You get innovative cash flow solutions, and an industry-leading mobile app with maximized rental value. With Belong, you can create long-term wealth while earning passive income. And if this is interesting to you, you want to learn more, check out try.belonghome.com/BiggerPockets. That's try.belonghome.com/BiggerPockets, or just click the link in the description. With that, let's jump into our deep dive of the Seattle market. You're probably aware of this, but historically, Seattle, at least over the last 10, 20 years, has been a very expensive market and is known as what I call an appreciation market. Over the last couple of years, we've seen almost every housing market appreciate, but Seattle, historically, for several decades now, home prices have appreciated well above the national average, well above the rate of inflation for a pretty long time. That has benefited people who already own property in the Seattle area, but on the flip side, that also means that prices are super expensive in Seattle. All of this growth, as growth pretty much everywhere has been fueled by a really strong economy. There are tons of major companies in the area. Most of them are in tech. You see like Microsoft and Amazon, but other companies like Starbucks and Boeing are also headquartered in the Seattle metro area. So this creates this really strong economy. And as we'll talk about in just a little bit, people in Seattle, generally speaking, make a lot of money. And so that's why this market has gone so crazy. Just to give you a sense of how much it's appreciated, in the last 10 years, the average home price, the median home price in Seattle has grown by approximately 140%. And I know over the last 2 years, we've all gotten accustomed to 20 or 30% a year, but that is not normal. And 140% over 10 years is very, very rapid growth. That's great. Again, like I said, for the people who already own property there. But with those high prices and that super high growth, that also comes, generally speaking, with worse cash flow potential. The prospects for cash flow, like just to be honest about Seattle, they have been pretty low in the past. Everything I've said so far is in the past, and we need to take a look at what is going on right now. So let's just dive into some of the data now. According to Redfin, the median sale price in March of 2023, just last month, was $710,000. So that's really expensive. Just for some context, on a national level, the median home price is just below $400,000 right now. So that is significantly higher at $710,000. But the significant thing to know here is that is actually down. Last March of 2022, the median home price in Seattle was $750,000. So it's gone down 5.4% or $40,000 in just 1 year. Even more telling, prices, as they have in a lot of markets across the US, in Seattle peaked back in July of 2022, and since then have come down 17%. So when we look at the recent peak, which was at about $850,000, prices have dropped considerably in Seattle, both in a year-over-year and month-over-month fashion, and that is worth noting as a really important thing to consider when you are investing. And we're going to talk about investing strategies in just a minute, but I want to move on to talking about rent in Seattle. When you look at rent, it is super high. It is about 50% higher than the national average, with the median rent or the average rent price in Seattle at $3,025. When you factor that in, that $3,025 average rent, and you look at the median home price at $710,000, you can calculate what is known as the rent to price ratio. If you're not familiar with this, You just basically divide 1 month of rent by the average purchase price, and you get a really good proxy for cash flow. It just helps you estimate whether or not you're likely to get cash flow. And the rent-to-price ratio right now in Seattle is about 0.4%. That's not very good. If you get at 1%, that is good. That means you're almost certainly going to find cash flow with the average deal. Even markets where the average rent-to-price ratio is 0.7, 0.8, you can still find good cash flowing deals. But at 0.4%, that's not really good. And it means that the average price, like if you just went on the MLS and bought a house in Seattle, cash flow is pretty unlikely. That's not every home. It is still possible to find deals because I'm saying 0.4% is the average. There are definitely deals that are better than that, but it's just not that likely to find cash flow. On the other hand, though, something to consider is that if you want to look at these high growth potential cities like Seattle, the rent-to-price ratio is actually better than some of the places in California, like San Francisco or Los Angeles. And so, again, it's still tough to find cash flow, but it's a little bit better than some of those other high-priced cities on the West Coast that we've talked about. So, something to think about. The other thing when it comes to rent that I think you should consider is that rent is still rising. So, home prices are going down, but rent, according to Belong, actually rose 5.3% year over year as of March 2023. So if you combine those two things together, that home prices are going down and rent is going up, that actually means that cash flow conditions are improving. Of course, you have to factor in the fact that interest rates have gone up a lot. But if you just take the financing out of it, if you're looking at this more of like a cap rate basis, you would see that general cash flow conditions are improving. And if interest rates come down, the potential cash flow in Seattle is definitely better than it was, basically a year ago. So that's basically where we're at for the basic market data. But there's a couple other things that I want you to think about when you're considering Seattle as a market. First is just the strength of the economy really needs to be said. Seattle is a top 5 area for metro income. Seattle itself, if you just look at the city, the median income is $105,000, which is about 50% higher than the national average. So that's really high. People in Seattle, generally speaking, make a lot of money. If you look at some of the smaller areas like Bellevue, which is sort of just east of the Seattle area, the median income is $147,000. That is enormous. Strong economy, strong wages, strong job growth are what help drive long-term rent and housing appreciation. And that income is what has pushed up housing prices in Seattle and rent prices in Seattle for several decades, and in my opinion, are likely to over the long run. And I'm saying over the long run because the next couple of years are a little more uncertain. You've probably seen in the in the media and the news these days that layoffs in the tech sector are really high right now. Like the most high-profile layoffs that we're seeing at this point, when I'm recording this in April of 2023, is tech-based. And Seattle is a very tech-heavy economy. We've seen companies like Meta, Google, Salesforce, and Amazon all have major high-profile layoffs, and these companies have big presences in Seattle. So this could impact the area in general. If you look at the unemployment rate right now, it's still solid. Like it's still okay because actually tech, nationally speaking, only makes up about 2% of the entire economy. But again, in Seattle, it's a much higher percentage. So this is a really key thing to be looking at over the next couple of months. There was a recent survey that showed that layoff anxiety in general, Seattle is leading the country in terms of layoff anxiety. So that is another thing you should be thinking about. Although the long-term growth prospects of Seattle are good, over the next year or two, as we sort through this economic uncertainty that we're in right now, Seattle sort of could be disproportionately negatively affected by what's going on. The other thing that is really interesting about Seattle and Washington State in general is something called upzoning. You've probably heard me or other people talk about this over the last couple of years, but there is generally considered to be a housing shortage in the United States. And municipalities, developers, investors, and landowners, whomever, a lot of people are just looking for creative solutions to add more housing supply to the country. One of the common solutions that's proposed is something called upzoning, which is basically increasing the building potential for existing lots. A lot of areas all across the country and suburbs in particular, you see these things where if you buy a plot of land, you're only allowed to build a single family home, right? You can have one house on that property. But a lot of economists and experts agree one of the solutions to solving the housing crisis, especially in these high-priced areas like Seattle, is to allow people to either build duplexes or triplexes on those places, or add like an ADU or a DADU, if you've ever heard of that, a detached accessory dwelling unit. Basically, like maybe you make an apartment above your garage, or you have sort of a mother-in-law suite, as they say. And so Washington State is really aggressively upzoning. So Seattle now allows a lot of these plots that you can buy to add an accessory dwelling. You can turn a basement into a second unit. There are lots of potentials for investors to add value to the existing properties that are really high price right now. Based on this data and conversations with investors friends I have in the area, I think there are two like pretty solid plays for investors here. First is house hacking. I say this all the time, but I think house hacking is always a good strategy for newbies because it helps you reduce the cost of living, and you can really save a lot of money or even earn cash flow in a really advantageous way. It's just a great way to get into a market, especially like Seattle, that's high priced, that could start going again quickly, right? Like you could be buying right now 17% below where it was last July, maybe even more if you negotiate well, which you should, and get in at a relatively low cost and be able to hopefully experience future appreciation that is driven by the strong economy in Seattle. The second thing is value add. If you're not familiar with that term, it really is sort of this catch-all for improving the quality of the property that you buy. You can do that in terms of a fix and flip. I think flipping in Seattle, if you do it well and are experienced at it, can be very lucrative. Just ask my friend James Stannard. He does it all the time. You can also look at renovating existing homes and holding on to them and earning cash flow from them. So adding value, sort of like a Burr type of strategy, can work in the Seattle market. And then the third thing I'd say in terms of value add is look at upzoning. You might be able to buy a single family home that is not offering great cash flow, but can you turn the basement into another unit? Can you add an ADU in the backyard, add extra units, add extra bedrooms? This is a creative way that really works well if you're willing to take on that extra work of investing in high-priced markets. All that said, all that advice said, let me just caveat it. Make sure you understand the market is still uncertain and you have to be careful. The market has declined and there's no saying that it has bottomed out yet. So I really recommend trying to buy under market value to protect yourself against future price declines. If you can do that, you can still invest in these markets like Seattle. I hope all this information has been helpful to you. I would love to hear your thoughts on the Seattle market in the comments below. Thanks again to our friends at Belong for sharing all this data with us. If you want to connect with them, you can find the link in the description below. We appreciate all of you watching. We'll see you next time.